is up with Nvidia? Crazy stage 2 monthly candle chart for years. That's the type of stock or instrument I love to get in. Up. When you get too far away, close in on a 12-month moving average. Up. Never really challenging. Really in the power zone all that way. If I go look on the fast stock monthly, the power zone right there. Look at that. All that time. Every time it came to go back into a neutral territory out of the overbought, you didn't want that. You want the price action to keep going up and up and up. Look at that. Never testing it except right here at the beginning. So if you would have entered here, that's just beautiful. And when it broke down, that was your warning sign. You had that monthly candle chart, that monthly candle breakdown right here. Close below that. After that declining 12-month moving average. It's time to get out. So what's happening right here? We are in the oversold power zone. It's starting to go out a little bit. So because of that strong pullback. And you want to see it stay in that type of environment. And I've noticed we're more often, the market's skewed upwards. We're more often in uptrends, in overbought power zone territory. And when it goes down, well, maybe the fear, people selling the downs are usually faster and harder. So we stay less in these zones. So don't expect a long power zone like that. When you're in the stage 4, it's probably going to be shorter, fueled by fear, panic. So that's why I come back. Being stage 2's very hard, even if the markets, everything's axed or biased for you to get some nice stage 2's. It's still a long time. So if you're too close to the news, every little bit of news release, you're gonna go crazy, and after that you'll start pulling out when you shouldn't. So identifying stage 2 is very easy. A++. The more you do that, the more you look at charts and observe, the better, easier it gets. But the hardest part is the patience in it. The patience to wait for that stage to break out, and after that, just the patience to stay in. So it looks easy here, but to do that, to maintain that from all this for 2 years, 17, 18, it's hard. Harder than it looks. So that's why I like stage 4 declines. Stage 4 declines, they're sharp. You stay less long in that power zone, and then you get to consume your profits the same way you would in the stage 2. Consume them in the stage 4. It's just faster to the target. So we're pulling back on the monthly right here. I go down to red candle. The market can close lower. Buyers coming in. So that's where I expect some resistance right here, some support and resistance. Let's see if it could go back all the way there. And then after that, and bake, lower highs, 12-month moving average getting close. Right now, how far are we away from the 12-month moving average? Where is distance from 12-month moving average? We're closing in, but you want to. We're at 20% away. So there's still a lot of room, a lot of gap, a lot of air for that to go back up before resuming its down trend. Okay, zoom in. So if you want to see how it's going to move on the monthly, well, if you want for turnarounds, you have to go in on the smaller time frames, and they'll be faster. And then you could get some clues if the stock's ready to turn over. Back at that. Stage 2, man, it's just beautiful. I should definitely keep that into the best examples of stage 2's. It's just beautiful. Just broke out, probably on high volume right here, and off it went, never closing below that 30-week average. Consolidation, sideways move, had opportunities to get in. It's a beautiful stand Weinstein play right here. Continuation, get in, and then hogging that through average, starting to slow down. Trendline violation. If you have more than 4 points, the more than 3 connected dots, break on the 4. If you're out, take half your position. right here, pretty much at the same time that we closed below 30 moving average. So that's pretty much where you would have taken your profits, right around this zone here, and you could have entered here in 2017 and all the way down here, outperforming the SPX above an inclining 30-week moving average. It's all of that. So yeah, it was starting to slow down. It's overperforming of the SPX. So you probably won't enter later when it starts doing that. You never want to buy when you're declining your Mansfield relative strength. You want to buy when you're inclining. That's the most, that's the power zone right there. When it explodes out. Here, if you're already in, your sell stops aren't getting triggered. You stay in. But this is where you want to buy. And you never want to short when it's going up against the SPX. And you want to short when it's going down, when all the weight of evidence piles up. So you don't short here, but once you cross you start negative versus the SPX, once you have a declining 30-week average and you're below it, below the Ichimoku cloud, add that on top of the weight of evidence, then you start thinking about shorting. So look at that red volume right here. Here could have been a late short when you had that close below. Well, right here, that first close below the October right here, close below the that monthly defined breakdown line, but you weren't quite out of the Ichimoku cloud. It's doing its thing. You see those wicks, the buyers coming in. So if you want the total weight of evidence, you didn't have the best timing. Right here, you could have taken half a position off the break, off the below that 12-month average, but you're still in. Is that November? I just want to see that. How does that look? Did we break down at that moment? Let me check. Okay, we had broken down from that top line in October, confirmed. And here you could have entered once you got out of the Ichimoku cloud in the first week of November. So on those breakouts, you could take a half position and then you wait for a pullback to the breakout line. Look at that mess. Oh, monthly candle scribbles do not fit on my weekly scribbles. All right. And what happened after that? Really slowed down. Still underperforming the SPX pretty much. Right there. Narrow. Underperforming the SPX. Sideways move. Is this going to bust back up? Or was that just a continuation breakdown like Stan has them on the bull run like we had here? Same thing happening. I could inverse the chart. We're catching up to that 30-week moving average. We're catching up to the... Well, if it goes back out, we're catching up to the monthly defined resistance. So right here, we have to wait to see if we have a possible continuation short. But you want it to turn around when you hit all those levels. You want it to go back, start turning back down. The Mansfield, just like that. You want it to re-increase its decline against the SPX. And you want to get some red candles like this, like we had here. If you could have all those weight of evidence, then it's a good continuation short. So Nvidia not pulling as hard below the Ichimoku cloud defined support, starting to create some red resistance right here. So as the time moves on, the cloud will be bigger and bigger here. So if it doesn't go out, it's going to have to go through that cloud and then go back up. But as that builds up, we're getting further and further away from those all-time highs. We haven't done higher. We're still trying to figure out the higher low, where it's going to be. It just moved sideways from there, really tight. So let's see if that's going to be a higher low to continue that downtrend of that stage 4 decline. Nothing positive here. So that's it for Nvidia, guys. Still in the stage 4 decline, and we could probably fine-tune in a short entry in a few weeks. See ya.